Everyone, Charlie here. We're going to talk about the RSI, which is the relative strength indicator. And this is going to be some layered psychology. I know that the markets are very cookie cutter, cut and dry. Everyone likes to do the same boring old technical strategies. They like to say, big words like Wyckoff and Elliott wave, and they think it makes them sound cool. But in reality, what we're trying to do here is make money. And what we're trying to do is use our brains and look at these tools that we have at our disposal to identify patterns via human pattern recognition, something that algorithms will never have. So we're going to talk about the RSI reset and layered psychology when it comes to the charts. Now I want you to clear your mind. I'm going to have to switch something up real quick. We're actually not going to talk about the RSI reset in this one. This is going to be more about the RSI in general and how to use it on the time frames and how I personally go about using it on different time frames. I needed to change the morph. You gotta have the morph, man. Okay, anyways. Sorry about that. Okay. So what I want you to do, I want you to clear your mind. Everything you've heard from every YouTuber, every news article, every person that trades, every family member, just clear your mind and hear me out for 1 second. So if you were to look at a stock chart, if you were handed money and you were told, hey, I want you to look at this chart and I want you to bet money when you think it's going to go down and bet money when you think it's going to go up. Whenever it goes down, you're going to use a thing called a put, and you're going to exploit that downwards movement. When it goes up, you're going to be using something that's called a call, and that's how you're going to exploit upward movement. So, two things, two directions, one chart. Do you think you could do it without any prior knowledge? That's all this is. Okay, so right now all it is you, a chart, and two vehicles to be able to capture the profit from that chart's movement. Now, you're going to be given one more thing. It's going to be a little cheat code. It's going to be called the relative strength index. And better yet, you're not only going to get one chart. Sure, it's going to be one ticker, but you have the option of using several time frames. And this is where it gets important. Clear your mind and just picture the following. Time and relativity, or time and value. Picture those two things. And before I go any further, I will give a brief recap on what the RSI is. Again, it stands for the Relative Strength Index. It is the momentum indicator used in technical analysis. RSI measures the speed and magnitude. Now keep this in mind. Options, theta, speed, momentum. It's the perfect setup and has the perfect mechanics behind it to line up with those two things you were given, calls and puts, to exploit directional movement for profit. Now, RSI measures the speed and magnitude of a security's recent price change. Sorry, I will mute the Discord. I apologize for that. Okay, sorry about that. Okay, anyways, RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued or undervalued conditions. Now, let's think back to those two things you were given, calls and puts. If your whole goal here is to look at a chart and make money when something goes up or down, these two words here give you a big hint. When something's overvalued, it's likely going to go down. If something's likely going to go down, you would want to utilize that put option that you have at your disposal. Now, if something's undervalued, most likely it's going to eventually go up. Not always. There are some circumstances that don't apply. But generally speaking, let's just say, 85% of the time, it wouldn't matter. You would just try, you would just do what works, because if you're winning 85% and you're only losing 15%, you're still winning. So, overvalued, undervalued, put, call. These are new things we just entered into our universe. So we have chart, we have up, down, we have call put, and we have overvalued and undervalued. And now we have the relative strength index. Now, it's displayed as an oscillator. You don't have to know what that means or what it is. It's just another fancy way of saying a line graph, and that's another thing. The semantics, get them out of your head. We're going to talk trader here, and by trader I mean unscrambled to, you just try it. But it ranges from 0 to 100. It's not like the moving averages. The moving averages range from 1 to 999. This ranges from 0 to 100. The indicator was developed by J. Wells Wilder Jr. and introduced in his seminal 1978 book, New Concepts in Technical Trading Systems. Now, this is an indicator that was created in 1978, before the industry as we know it was even created, and it's still used in one of the most prominent indicators in the market. And even most APIs offer RSI data for free. So, the RSI can do more than point to overbought and oversold securities. It can also indicate securities that may be primed for a trend reversal. Now, this part we're going to ignore because trending, obviously we can utilize that here with RSI, but we're going to keep it simple for this video and just keep the overbought and oversold mentality in your head. But as you gain practice with this, you will tell and be able to see reversals and pullbacks because, again, it's just a learning experience. So the more you look at it, the more you'll learn. It's like an organism. Now, it can signal when to buy and sell. Traditionally, an RSI reading of 70, and this is where it's more important, 70 is overbought and 30 or below is oversold. So all you need to take away from everything you've read up to this point, and there are some exceptions to that 30-70 rule, by the way, such as corporate actions, splits, mergers, reverse splits, buyouts, spinoffs, could be exceptions to this, as we've seen not only in our group, but may see with GME here pretty soon too. But everything that I've just said so far up into this video, brief recap. All you're doing is you're sitting in front of a phone chart, whatever you like to use to look at charts. You have one indicator. You have the relative strength index, which we just learned about. It is overbought at 70 or above. It is oversold at 30 or below. You have the task of making profit when this stock chart goes up or down. And you have two vehicles to be able to capture that movement with. So it sounds to me like you're set up for success here. Now, keep in mind, you also have multiple time frames that you can use to gather what you can about what's going to happen as far as the price movement. So we have time, and this is important. Each time frame is basically a different view into the market. If swing and day trading, I see people all the time, they stick to one time frame. Never do that. The market, it's multiple windows, it's multifaceted organism. You must look through various time frames at your disposal. Now, every trader is unique. Now, this is why cookie cutter strategies will never work. What works for someone may not work for someone else. That's why it is crucial, and you'll never ever understand fully what you're doing as a trader, which is dangerous, until you put some time in and start growing your personal psychology in the market. You have to. It's a journey, man. It's not going to be given to you. It can't be given to you. You have to just spend some time. You will learn a lot about yourself, but it's really not that hard. All it does is require consistency, and you have to preserve your own personal psychology. Now, we're going to speed this up a little bit. It's getting into a long video, but now we're going to be putting time and value together now. So what we see here are the time frames I use to survey the RSI most often, and again, this is going to vary from person to person. Some people like the 2 minute, some people like the 15, the 20, the 45. These are the ones I like to use to survey, the market from a micro and a macro perspective. But, sometimes I will use the weekly or monthly, depending on the situation. It's very situational. But these, on average, are the ones that I use when I'm trading intraday. Now, we're going to go through these and just follow along. So here's the RSI. Remember, our goal is to make money going up or going down as far as the stock. Now, the chart here, this is where it gets fun, because the chart, you don't even need it, really. You can trade with just the RSI alone. If it helps to put a red line here where the overbought marker is at 70, and a green line here where the oversold marker is at 30, and then do that. Again, do what works for you. You have drawing tools, multiple time frames to use at your disposal, and all you got to do is capture that upwards and downwards movement. So this is the 1 minute here. Let's go ahead and see all of the opportunities that you had to go ahead and make some money just looking at this one time frame. And by the way, these are the RSI resets that I referred to at the beginning of the video. This is just one form of them. I'll be making a separate video on that later on and go into more detail on it, because it has helped make a lot of us quite a bit of money. Now, again, upwards and downwards direction. That was the 1 minute we just looked at. We're not going to do any variances here because we had the RSI reset, which kind of threw everything off and started the day out here, because it would have been a nice trend down had it started there. But we're going to go ahead and start from the 3 minute. I don't like to trade ever off the 1 minute. I just like to briefly glance at it to see what's going on that 1 minute psychology level. Because remember, every candle you look at in the market, all it is basically a timestamp, and the size of it is the time frame you're on. So every candle here is 1 minute. 1 minute of psychology. But you go to 3 minute, and then every candle here is 3 minutes. Now, what we're doing is F the chart up top, except to compare it with what you're seeing in the RSI. So the RSI, by the way, the default is 14 days. And what I've done here is I've marked the tops and the bottoms with green squares for calls and red for puts. But then I realized, because I'm baked, that this is pre-market and you cannot trade options in pre-market. Now, so right here, if the RSI is hanging low right here underneath that midway point, and you bought calls, remember, you want upward movement. If the RSI is towards the low side, what's it likely going to do? Go back up to the upside. And that's what it did. So there you go. You have calls, puts, and calls. You had 3 very easy opportunities today to make some upwards and downwards movement. And there was more wedged in there. This is just general trends up and down. Like if you were in the money here, you would have been fine. No matter what it did up here, you would have been fine. And in the money, remember, is you want to buy your options unless you're a skilled expert. I know people in the group are rolling because I often play out of the money, but I didn't start that way. In the money is safer because theta doesn't murk you as quickly. But if the RSI is hanging low, obviously calls would be a good idea in the money. The exit strategy here is if you get pushed out of the money, get the F out. You saved your ass, and if it pumps to the T's, hey, you're still alive to try it again tomorrow. Because again, all it is up and down. Let's go to the 5 minute now. Now we're a little bit more condensed. You see here, calls, puts, and calls. Hung near the high side all day. But that's besides the point. This was opportunity for profit. Then we go to the 30 minute. Now this is where it gets interesting because we just passed from the micro time frames to the mid-tier time frames. 1, 2, 3, 5, and 10 micro. Actually, 1, 2, 3, and 5, I'm sorry, are micro. 10, 15, 20, and 30 are the mid-tier. Then you have the 1 hour, 2 hour, 4 hour, and daily is the high tier. And then you have the macro, which is the monthly, quarterly, and yearly. But here, if we're looking at the 30 minute, we have one opportunity basically by looking at this chart. We bought calls in the morning. We had a good day. But then we get to the middle of the day, and all of a sudden, what happens? The chart disagrees with the RSI. So naturally, if you were just looking at the RSI here, you would obviously want to play puts probably the second that it crosses that overbought territory. But because you're smart and you use multiple time frames, you would have known by continuing to go up in time that there is another way to look at this situation. which right here, there's still room on the 4-hour for this thing to go up. So that is exactly how I do it. I will go and I'll cycle through, and if it's overbought on the 3-minute, I don't say, oh fuck, and sell my stuff. I cycle all the way through up to the daily to ensure that there could still potentially be some room for a continuation, which is exactly what happened. Now, again, practice is what makes this possible. Now, this is where it gets funny, because why are all of the RSI syncing up and weighing heavy to the upside in such a bear-mongering, fear-mongering, death and destruction market right now, with everyone crying market crash of 2022? You know, sorry, some dude I met at Sam's Butchers in Wall Street told me that. But with all these bears out here, and all this doom and gloom in the media, and all this rate hike nonsense and housing crisis and war with Russia and everything else going on, what's going on here? Why is this happening? Why are all of the RSI syncing up to be overbought? Obviously to go back down. But what does it have to do before it goes back down? It's gonna fill this gap, or at least test the gap resistance like it did here and then went down, like it tried to do here and then went down, but then it didn't make it. So it had to come and do a RSI reset to give itself enough room to go back up and make it. Now, I probably just lost like 99% of you there, and I do apologize, but it's when you get to this point, you will see it is ridiculously easy. It's all you need. You cycle through. There was no visible gaps on any other time frame, and usually it is the other way around. Normally, you will look on the 1 minute and you will see multiple gaps, but guess what? You didn't here because you had Wick Daddy Dicks come down and save the day. Because what did we learn about wicks the other day? They fill gaps, don't they? They sure effing do. So I'm not crazy. All this shit's coming together. What the fuck just happened? I'm not crazy. Everything's coming together. And you know it is, Billy. You can smell it. Look at this corridor right there. Whew. Looks like some gap support. But let's go back to those lower time frames. Look at these gaps here in pre-market. Or I'm sorry, post-market. This is gap support. And we end up in a corridor. Support, support, resistance there to keep us held there in after hours. Let's go back to the chart. What did this candle do? I don't know. This one, looks like it filled most of that gap there. These micro gaps. So yeah, that's this retarded video for you. But yeah, if you want to know what's going on with the market, look on multiple time frames. That's all you have to do. They clearly want this gap filled by FOMC, or maybe not filled, maybe a partial fill, because they're going to swoop back down and they're going to fill up this mofo here, 369.38, and then we'll see what happens from there. But yeah, this video is way too fucking long, and hopefully this helps somebody. RSI is all you need, man, because this daily here, we got plenty of fucking room. Despite all these be saying overbought, 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 or nearing overbought, we got room and enough time. Look at the weekly. Look at the weekly. Remember, prediction. I mean, I'm thinking 470 to 500 end of year. And really, I'm really just gonna stick to my original number and just go ahead and just keep it with 500. COVID was a perfect RSI reset on the weekly. I mean, it went from overbought to oversold. Here, no. Did it do it in 2008? 2008, it started at oversold. Jesus Christ. And that's the difference, right? We didn't start at overbought at 2008. Look at COVID. We were way the F up here. We didn't crash because there was a problem. We crashed because they had to do the RSI reset of all resets, which was the Great Reset. This was the great reset right here on a chart right there, literally looking at you in the face. This psychology, these weeks here in 2020, that was a reset, brother. And then look, but from March 2020 to it gets really overbought for the first time in May of 2021. I mean, and then since then we've just been basically trending down, and we're about to go back up because you know why? That's what the fucking RSI does. It goes down, it goes up. It's always done that. It's just not really. I mean, that's a good reset, but we got plenty of freaking room. So let's go, Brandon.